Alright traders, we're looking at S&P 500 and-mini futures, and the time frame is 2000 tick chart. When we are trading, we're looking for three things. We're looking for context, we're looking for pattern, and we're looking for market behavior. Now the pattern just gets us into a trade, but whether the trade is going to be suitable entry or not all depends based on the market context. If the context is good, then the pattern we can enter on, and then we analyze the behavior, meaning what is the signal bar at the current time. And today's context and today's structure started looking very bullish. You guys can see we have an EMA pointing higher. We are making higher highs, higher lows. And even though we are far away from EMA, which indicates that we are going to pull back soon, EMA acts as a magnet. I'm not going to pick a top because I'm sticking with the trend. That's what's going to generate a high probability entries. And the market keeps pushing higher. At this point on, I'm not worried about any entry. I don't care that we are moving higher. These entries are risky. You want to wait for market to come back to the key entry point, which is the trend line or the exponential moving average or support resistance line. Okay, and I can see that we have a new high right here, and the market formed a first attempt to go higher, which I'm going to ignore because we are still not at the key entry point, and this is still only the first entry. Second entry is going to be a high probability setup. And look what I have. I have a second attempt, strong bullish bar. This is the two-legged pullback, which would be a high probability setup if it was at the key entry point. There is a huge gap between both key entry points, and this is how you're going to get trapped. If you enter far away from key entry point in the middle of no man's land, you have to pay attention and be patient and sit on your hands at this point. And you guys can see this is what would have happened. When I was watching this, I drew my trend line first like this. And why am I doing this? Because the bigger pattern is up and this is just a correction. The downtrend is correction, so I'm drawing these corrections tight. And I have a break and I have a new extreme form, and we have a potential, a bullish, another move forming. This would be a third entry long. Now third entry is really not an entry. That's not really a pattern, but take a look how we're getting a little bit of a rejection at the proper key entry point. We touch almost the EMA, the trend line is holding. So from this point on, I can be interested in going long. But look what happened. We have a strong bearish move down, and this already indicated something different, because if the uptrend is holding nicely and it's strong, EMA is supposed to hold price and it shouldn't let price close below. This is already indicating something different. And once this bar formed and I notice how nicely price is pointing down here, this is where I adjusted my trend line to something like this and something like this, because this is now a valid downtrend, because price was supposed to stay above the EMA and it didn't. And you guys can see I have a first entry long, second entry long, a third entry long. And this is exactly around the open, I think 15:30:06. Yeah, so this is exactly at the open, which you don't want to be trading exactly at the open. A lot of times there's going to be a fake out trap, but nevertheless, the way price pushed below EMA, this is enough indication for you to widen the trend line just a little bit. You guys can see you could have probably scalped out of this, but I don't recommend taking this entry at all. There is the break and there is a new extreme form for the downtrend. All right, with that being said, the price is still hovering around this EMA. We haven't proven that we pushed above, and at this point on, I'm not going to pick an entry that is looking a little bit sketchy like this. But the downtrend played out with the break and a new extreme, which tells us the sellers are no longer in control. And I'm looking for a new high of the overall pattern. This is just a first break of this entire uptrend, so everything is bullish. But I'm still being patient here. You guys can see how we're starting to stack up here, and which is really now what you want to see. EMA is getting flat, and you guys can see this is starting to look very congestive like. So the best thing to do here is just sit on your hands. I'm still thinking that I'm going to make a move to a new extreme, so I'm looking for opportunities to go long, not opportunities to sell. And I have a new high, new low, first entry short, and this is a higher low setup. But as you guys can see, it was a bad bearish signal bar. All right, this is why I'm not marking this entry, even though with the downtrend played out with the break and a new extreme, and I'm looking for a new high. This is just, it has 3 ticks of a bearish body, and this is not ideal market behavior that I want to see. So I have a pattern, yes, I have a structure, yes, but the behavior is not what I want to see. And there is the first high probability setup for the day, new extreme, first entry short, second entry short right here. But take a look how EMA cannot close price below. This is what I wanted to see right here for me to go long. We pushed below, so I'm not gonna go long here. Now EMA nicely cannot let price close below. Big bullish bar. There was a second entry short failure forming on this bar, and I was about to enter right here, but it instantly reversed back into this bearish bar, and then the big bullish bar formed once again. So hopefully you guys understand, and we're looking for price to create new extreme. Everything is bullish, but market just turned down for whatever reason. All right, so all we did is we created an attempt to have a new extreme, and sometimes attempt is enough. And this overall is starting to look very range-like. EMA is getting flagged, so I'm going to draw this minor trading range. Once again, I'm analyzing the context. I'm still not thinking about selling. I'm not going to pick a top just yet. All right, I'm going to draw my shortened trend line. You guys can see how nicely price fits inside of this. And price is pushing lower and price is pushing lower. And take a look. We have a potential failed breakout situation because most breakouts of these trading ranges will fail. However, I'm not thinking about entering this breakout because I have the shortened downtrend still in play. I can only buy here if I get a break and a new extreme form. All right, and this is now a legit downtrend. You guys can see we are pushing lower. We finally have a new first break for this overall downtrend. So I'm still thinking bearish because this uptrend has proven that we barely created some sort of a double top, it looks like, and we instantly pushed below EMA, which is confirming that the sellers are now in control. You guys can see the downtrend is valid, the structure is bearish. So I'm looking for market to create what? To create new extreme after a break. But EMA, it all depends how EMA acts, because if we push above EMA, then I'm not going to be shorting the market. If EMA holds price below, that's when I'm interested to take a second entry short. All right, because with the direction of uptrend, second entry longs are high probability setups at key entry points, and second entry shorts are high probability setups in downtrend. Take a look what you have. You have a new low, first entry short, little one tick higher, and instant reversal, second entry short. This would have been a great entry if the signal bar was slightly smaller. How big this was. Your stop loss should really ideally go above this entire swing, but let me just forsake 4.25 points. So this is quite risky. But this is a great second entry short with the direction of a trade, and the market took off lower. All right, so this is the second high probability setup. I hopefully you guys see what you are looking for. You're not focusing on a bunch of these first entries, bottom picks, top picks. No, you only follow the structure and you take a clean high probability setup. Oh, and looking at this was even new high, first entry long, a second entry long. I completely forgot about this when I was watching this live. New high, first entry long, second entry long. So the market just took off lower, and now what you have a new extreme form. So the same thing right here, attempt to new high. I stopped thinking about longs. At this point on, I stopped thinking about shorts. Okay, until if the market proves me that, you know, we're continuing working lower. Right now, we made the 50% pullback of this move, so we can expect a correction now. We have a new low, we have a first entry short, little pullback, a second entry short, but I don't want to go short yet. Right after we already had a new extreme break, a new low, and if anything, this is starting to look like it's maybe going to go into trading range. So this is when I'm just sitting on my hands, because after price creates a new extreme, I can expect correction or straight up reversal. And by this time, I see a bunch of bars just going sideways. This just confirms that this is most likely going to be a trading range. I'm going to draw my range, something like this. You guys can see your 1, 2, 3, 4, 5, 6 bars going sideways. You're very close to these lows. EMA is starting to flatten. It's no longer pointing down. And just after new low, you cannot enter short for all the reasons stated. All right, the market is pushing sideways. At the same time, you don't want to go long either, because the price is still congested. EMA is starting to get flat. You're in this range, and this is starting to get very congestive and sideways looking, and this is not a clear with trend entry. So I'm just sitting on my hand patiently. This double top right here was really tempting to take because market tested the resistance once again, and it looks like there's a little bit of bearish bias, but still EMA is flat. This was just a sideways movement, and it can get very risky. So you want to be really patient, not make any mistake. And market just keeps chopping. You guys can see, keep chopping. When it looks tempting to go long and short at the same time, you know that you're most likely going to get chopped and trapped in one way or another. This is where you have to practice your patience and stay and sit on your hands, because not taking a trade is a good skill that you need to learn as a trader. The market keeps pushing higher, keeps pushing higher. So what I'm going to do, I'm going to draw, actually, I'm going to draw my shortened trend line like this, and we have a failed breakout, because this is a consolidating structure, and most breakouts of trading ranges will fail. But since we pulled back to the 50% of previous uptrend, I thought kind of we're going to push higher a little bit. And so I don't think it is still good to take this entry, but this is a failed breakout. Let me just pull a little bit higher. This is a failed breakout, and most breakouts of trading ranges will fail. And at this point on, this is where I thought that there may be a potential trend line like this, because of first two swings, a lot of times you will find a trend line. Third swing confirmed it. I'm just going to drag it at the bottom, and price overall looks like we may continue in this kind of bearish downtrend or like a bearish trading range, because this is a range-like structure. We have a little bit of bearish bias. So at this point on, I'm not going to go long at all. And what I can see, I have a new high, first entry long, support is holding, which I don't care because it's just a first entry. At this point on, I'm just watching whether this uptrend is going, whether this upward trend line or the downtrend is going to get confirmed or not, because we can push higher from here. And I will delete this channel because that's completely normal. A lot of times you will keep drawing the trend lines. I think like Al Brooks mentioned that he draws like 100 lines on the chart per trading session, and he keeps deleting them every single time, because you keep looking for channels, and you see what is going to validate your trend line or what's not. So I'm just sitting patiently here, just the first entry, and I have a strong bearish move down. This would be a gorgeous sort of like a lower high. We created the matching high, so it's not technically a lower high, but you could treat it that way. Micro double top. This is now a fourth confirmation of this downtrend, and this is a confirmation of the failed breakout. So you're truly indicating that you're going to push back below the EMA. So this would have been, I'm going to mark it as only as an educational purpose, because it's only if the signal bar is going to be smaller, but this would have been a great trap because you push so strongly, such a strong bearish rejection, simple price action, and market just pushed lower. So what I'm going to do, I'm going to draw my short-term trend line, and I wonder if you guys can tell me why, I can't drag this, why I'm not going to go long here, because this is another failed breakout, but I'm not for same thing, I didn't go short here. I'm not going to go long here because I have this downtrend in play, and I want to see a break and a new extreme to the downside. All right, after this strong move down, we really this was a very strong bearish move. This really indicates that we're going to push lower most likely. So I'm just sitting patiently. I have a break, I have a new extreme, and I have a strong push up, but at the same time I don't want to be thinking about buying, because this downtrend is starting to look really strong and really valid. Market is just pushing higher, and you guys can see we kind of keep crawling lower. And this was the confusing part of today on the December contract, because you're not touching the EMA, but at the same time you're hugging the lower trend line. So what's going to be valid? A bunch of weird consolidating bars, so you're just sitting on your hands. We have a first sign of what it looks like it's going to be a potential uptrend. Now this is a sort of like a range with the bearish tilt, so I'm looking for second entry short. So I'm going to draw my short-term uptrend, and I want to see this is a first entry short. So what I want to see now, I want to see a little break, potentially a lower high, second entry when I can go short, and it just never happened. Market just completely rallied to the downside. So this is a technically, I found this trend line way after the fact. I don't think there was anything to tell you that there's this trend line, but this is a breakout pullback pattern. As you guys can see, price broke this area, pull back, retested it, and we turned down lower. But it's just a first entry. This is if you're an advanced trader and something tells you to pull the trigger here, because you have the support here that acts as a resistance. Now you have the EMA, so you have multiple key entry points. You have a context on your side, so you're expecting for price to move lower. But it is hard for me to mark it as a high probability setup for a lot of new people who are sticking to rules to follow the second entry. All right, and once the market push lower, this is where I'm going to mark my low for the day, because I expect for price to bounce here, and I expect for price to reverse from this point on. All right, and market is pushing higher, and look what I have. I'm not buying yet because I'm expecting for price to make it to the low of the day, and I have a new low, first entry short, second entry short. What looks like with the strong downtrend off the key entry point, and I have a break at a new extreme. So I'm preparing my sell limit order here. If I get a trigger below this bearish bar, remember, I cannot go short below bullish bar because I'm in a downtrend. In uptrend, I can go long above bullish bar. I cannot go long above bearish bar in uptrend. In downtrend, I have to short below the bearish bar, because this is the behavior that I want to see, right? So I have a context, I have a pattern, I have a behavior on my side, and market doesn't even trigger and just keeps reversing. So at this point on, I have to adapt to the market. Market didn't do what I thought it was going to do. It happens. You keep thinking and you keep reanalyzing the chart all over and over again once you are watching the chart live. And this entry never triggered. And from this point on, I was still having a little bit of a bearish bias because I was expecting for price to reach this low of the day. What ended up being, it was probably a little bit higher here. We turned down from here. This was an overshoot of the downtrend, and market just keeps pushing higher, and you have a new high, only a first entry long, and market pushed higher. And take a look what you have here. You have a fifth confirmation of this downtrend. Now, this is a trading range with a little bit of a bearish bias. This is not like a downtrend that you want to really stick to and religiously keep selling. This is still a range fill structure. And this looks like it's going to be one of those days where you're going to have trading range, move down, trading range, move down, trading range, move down. There can happen this structure like this. This is why I was leaning a little bit more to the downtrend. At this point on, I have an overshoot of this uptrend, which a lot of times leads to breakout trend line or straight up reversal. But this is still too early to go short. This is a top pick trade. This is aggressive trade. This is a risky trade. You're taking odds here that really it's not high probability setup, what I want to say. So I think it's better to skip this trade as well. You guys can see market stopped you out, and then this another confirmation happened. Now this was extremely tempting trade because you know they shook out a lot of weak shorts who entered a little bit too early. They stopped them and instantly reversed. Take a look how far away you're from EMA and how nice this trend line seems to be holding on this December contract. So this is a really tempting trade, but this is once again with the overshoot, you can push higher, and this is a topic. I'm not going to mark it as a safe entry. You guys can see it would have worked for a scalp, and I had my limit order prepared, but I just couldn't force myself to pull the trigger here on Friday because if you have a losing trade, you don't have a chance to make it back. And market ended up pushing higher a little bit, but then we eventually sold off, and it looked like the downtrend is going to hold. But now we've been working quite for a long time. If this downtrend is valid and it's not a trading range, then we have a massive overshoot. You have a new high, a lower high here, but you're still above the EMA. Just a little bit confusing here. And we're going to take a look on a March contract. Here was actually a long opportunity actually right here, but we're going to talk about that. And we have we actually have a first break right here. You have a new high, first entry long, second entry long. So you're expecting for price to create new extreme of this uptrend because you now pushed strongly now above the EMA, which indicates that the bullish momentum, the EMA is not holding price, and price is just strongly pushing higher, strongly pushing higher. You guys can see we are working higher. We have a new extreme form. So this is the break new extreme. Market is working lower. You have a new high, first entry long, pullback, second entry long. I'm not a big fan of this second entry long because you just had a break and a new extreme. You know what? I will mark it. I will mark it new high, first entry long, second entry long. But if I drew my trend line like this, I don't have, I'm not at this trend line yet. So this is a little bit risky after just breaking a new extreme. I still haven't proven this trend line. So, you know, you don't want to go short at this point. No, you don't want to pick top. At the same time, you're not going to go long when it looks like it's a little bit wedging and the market is slowing down here. So I'm just sitting patiently here. I have a bounce of this trend line, but this is a horrible doji. Market broke the trend line, and I'm just sitting patiently here. No clear setup. Maybe I can get a failed second entry short. Let me see. I don't know because market is already closed. So this was the December contracts. I traded it today, and here we are at the March contract, which when I was watching the market live at the beginning of the day, the December contract had the most volume, but after market open, it switched. And I decided to stay on the December, but the March contract had plenty of more bars, and with the more bars being printed, this is a clear trading range. The downtrend is no longer as visible. So with the more bars being shown, this is a clear trading range. But you guys can see a lot of setups were similar, but a lot of setups were a little bit different because we have a similar situation right here. You have an overshoot, you have a break, new extreme, you have a first entry short, second entry short, perfect reversal pattern at the EMA. attempt to create new high. You have a first entry short, second entry short with a horrible bullish bar, and this bar is way too big because your stop loss has to go above here. So once again, same thing as on the December contract, market consolidated. Once again, the same thing, break, new extreme, consolidation, flat EMA, you have a failed breakout. Here's the difference from the December contract. I actually like looking back, going long here. You have a new high, first entry long, second entry long. This is the two-legged pullback at the key entry point because you guys can see the resistance now acts as a support and you have EMA, and this is two-legged pullback. So this was a quick, easy scalp for those who took it, but you guys can see a little bit of difference from the December contract here. To pick this stop was a little bit tricky, but you guys can see it pushed lower. You have a consolidation, same thing, you don't want to go long yet. You have a break, new extreme. Here was the trap that was a little bit tricky, and I want to talk about this because let me just move it a little bit. You have a new low, first entry short, second entry short, failure. Okay, but you don't want to go short when you're not touching the EMA. And there was a third entry that honestly, if you're watching this and you took it, I don't think you did anything wrong here. I wasn't watching the March contract. I probably would have gotten clapped here because why wouldn't you take this trade? This is a nice downtrend. The uptrend looks like it played out. I mean, trading is about taking a chance and you cannot cherry pick. This is a decent setup. What it ended up being, they just trapped everybody in, and once they created this additional move, this is where you have to re-enter and go short here. But you know, it is hard probably to wait here. I don't know, bars are starting to get stacked. Yes, you guys can see a lot of bars are going to get stacked. So 1, 2, 3, 4, 5, 6. So this is kind of like a good sign that you want to stay a little bit careful. You created that fell break a little bit high, but this is all on a micro scale. But you know, after you push lower here, EMA keeps holding. Take a look how EMA cannot let price close above. This is a good indication that the downtrend will be strong. I'm still going to draw the key level right here. I have a strong push down. I have a multiple bars going higher. I have a new high, first entry long. You didn't get no second entry. You have once again first entry. And here's another difference from the December contract. First of all, the downtrend doesn't really fit that nicely here, but you have once again new high, first entry long, second entry long at 2 key entry points. This is the second entry long at 2 key entry points. Same pattern right here. You have a trend line here as additional entry. So this is, you know, great entry to take a chance here. Market break, attempt to create a new low, push lower, and trade up higher. Then you have a bunch of stems. I kind of like drawing this downtrend, but you have bunch of stems, bunch of bars going sideways. There's no clear direction of the market. You guys can see there is a, you know, market was choppy overall, yes, but here you get very overlapping structure, So we want to be a little bit patient here. You guys can see break of the uptrend, and right now the market is working sideways. All right, so the Monday is definitely a March contract day. I should have rollovered even today, but once I'm trading one contract, I kind of don't want to reanalyze the chart again. I just want to stick to one trade, but it didn't really have that many good setups. I think the first 2 setups for the day were the best ones, or the 3 setups right here. So yes, so that was the video, a little bit longer. Hopefully you guys made it to the end, and I'm going to see you guys in the next one. Enjoy the weekend and take care, buddy. Bye bye.